Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We are coming to you as always bright and early from the CNBC-TV18 Motilal Oswal studios. Coming towards the second half or the latter half of the week, I'm Surabhi Upadhyay, as always with me, Nigel D'Souza. And today we have Rima in the house. Good morning, guys.
Morning.
Hi, good morning. Things seem to be calm, right? We've gotten used to so much volatility, so many headlines. But over the last few days, markets have been in a tight range. And we've been low on headlines.
Well, I think calm is not so bad, right? After
the storm.
Yeah, after the kind of news flow that we have had. So I think markets consolidate a little bit. Broader markets are participating as well. And gradually, after a while, you're getting that feel-good factor yet again. If you check your mutual fund portfolio, you check your portfolio on the whole, things are looking a little bit better than, say, a month and a half, 2 months ago. So we'll take that, I guess.
Oh, absolutely. And, it's also calm, I think, in terms of the market just digesting the level of news flow that we've had.
Yeah.
And the news flow continues to be fairly robust, especially when it comes to geopolitics. And that's also a watch point. So actually, let's get started by talking about what happened overnight. So what happened overnight was we had a continuation of the rally on Wall Street. However, it's becoming a little narrow. So slightly mixed yesterday. The Dow couldn't be in the green, but the other two indices did fairly well. The S&P 500 as well as the NASDAQ. They kept notching on the gains, and it's been a fantastic winning spree for US tech. That continued last night because the NASDAQ managed a gain of about 0.7%. And for the week, thanks to the mega rally that we are seeing in the MAX 7, that index is up almost 7% already. I mean, and that's just counting 3 trading sessions on the US market action. Now, why am I talking about geopolitics? Because there's a lot going on. Today, specifically, this Russia-Ukraine conversation is going to be in very, very sharp focus. Remember, we had Mr. Zelensky pretty much throwing out an open invitation to Putin, saying, let's meet in Istanbul, in Turkey. So those talks are slated. It's not very clear who will turn up and who won't. International reports are indicating that Putin himself may not come for these talks. But let's see. We'll have more clarity as the day emerges. But this is going to be one important watch point. Yesterday, the developments out of the Middle East were very, very interesting as well. And in fact, they left certain sections of the Western world perhaps shocked, if I can say. And this is the fact that the US is now lifting sanctions on Syria. Donald Trump yesterday met the interim Syrian president, Ahmad al-Sharar. This was in Saudi Arabia. There was also the Turkish president Erdogan on that call as well. So a lot of these shifting equations, trade and, geopolitical equations in the Middle East are also something that the markets are tracking very, very carefully. Now, let's come back to the action in the currency and the commodity space. The yields inched up yesterday. US 10-year actually moved up to about 4.5%, slight climb higher, 2-3 basis points higher. Today is an important day in terms of data point because the consumer inflation numbers that came out of the US are fairly benign. Today, we will have the PPI data, the producer price index. That's not all. We'll have the retail sales number and the industrial, production number for the month of April as well. That will give further direction to markets, including to yields. The dollar index has been range-bound. Yesterday, the dollar recovered a bit in U.S. action. This morning, again, the index is on the back foot, as you can see. It's down a couple of basis points. The broad range this week for the dollar index has been about 100.5 on the downside, going up to 101.8. That was the peak that we've seen so far this week. So today, we are in the middle of that trading range. For India, it's been about consolidation when it comes to the large cap space, but the consolidation itself has a positive bias. There's no taking away from that. Flows are a little mixed, and, we've had a slightly patchy performance from the FPIs, but they haven't entirely gone away from the market, and we'll talk more about that as we go forward. The broader market up move is continuing. So it's telling you that there's that feel-good factor in the market. The market is willing to reward good earnings, and that's what we saw yesterday as well. And even today, we'll talk more about earnings as we go forward. We actually have some, decent surprises, Jubilant, Aisha, even Hitachi. So you do have some good numbers to talk about today as well. The only caveat here is the bank Nifty, because we're not seeing a sustained pullback on that particular index. And that outperformance is something we need to watch. And that brings me back to the point on flows, because flows are patchy. And we have this question now. The key question for the market is whether there will be this near-term tactical shift by FPIs to China. We saw that play out yesterday, and that's something that we need to sort of look at. But as I said, I don't think the FPIs have entirely gone away from the Indian market either. Reema.
Well, yesterday we had a buy figure from both the DIIs and the FIs. So that number will come up for you. The DIIs bought 316 crore in the cash market. The FIs net bought 931 crore in the cash market. So those are the numbers for yesterday. But here's what you need to know. So as Surbhi pointed out, Wall Street took a breather. The S&P 500 eked out a very minor gain of about 0.1%. But it's been a strong week for US equities across the board. The S&P 500 is up 4.1% for the week. The Dow has gained nearly 2% and the Nasdaq has surged 6.8%. And it's the tech giants leading the way. Nvidia, Tesla up 16% this week. Meta, 11.5%. Amazon, Alphabet, both soaring close to about 8%. And Nvidia, by the way, has now turned positive for 2025. And since 9th of April, which was the peak tariff uncertainty day, the Nasdaq is now up 25%. That's the extent of the gains that we've seen. Okay, getting back to the cues back home, fairly inline numbers coming in from Eicher Motors. So that's a positive. Jubilant Foodworks, Tata Power, Muthoot Finance, all perhaps in line to positive, so that's good. On the way down, Apollo Tyres earnings were a miss, so that could weigh on the stock. We'll discuss that in greater detail. As I said, both the FIs and DIIs were buyers in the cash market. The net buy from the two of them together was close to about 1250 crore rupees. Today is the Nifty 50 weekly contracts expiry, so that could add to its volatility. And in terms of earnings, it's mid-cap action. CESC, Crompton Consumer, JSW Energy, LIC Housing Finance, NCC, Page Industries, Patanjali Foods, PB Fintech, Tube Investments, just to name a few. These would be the stocks which should be on your earnings calendar for the day. But Nigel, what are you looking at?
Well, in yesterday's trading session, you had an element of short covering that did play out yet again. So if you look at the Nifty, well, we ended higher and the open interest was lower. For the Nifty Bank, well, it managed to defend a crucial level, which was the 20 DMA in yesterday's trading session, and we popped up from there. So that as well was encouraging to see a bit of a fight back that we saw in the last 60 minutes or so. A couple of big positives that I've noticed in the last few sessions. One is that the mutual fund industry is sitting on a good amount of cash. So in case things get a little bit iffy, we are sitting on a good amount of ammunition here. It's roughly around 6% or thereabouts, which is a positive. The other one is the way the VIX have cooled up. From around the 22-odd mark, we're down to around the 17-odd mark, which is good. And in fact, even yesterday's trading session, the India VIX was down close to around 4% or thereabouts. Cooling VIX is normally a bullish sign. What about positioning? The FIs, they're net short. The clients are net long. This combination isn't so bad as history suggests. In the recent past, we've seen when the FIs are aggressively net short and the clients are long, normally the clients get it correct. So this combination is good. Since today's the weekly expiry, I pulled out two strikes that were fairly active in yesterday's trading session. One is the 24,700 call. It was fairly active in trade. The premium out here is around 66 rupees. And on the downside, the 24,500 put, well, that as well fairly active. Around 50 rupees is what the premium is. You just look at this particular level, that's a 24,700. You add that 67 rupees or thereabouts, and that perfectly tallies in with the high that we saw. So this becomes a crucial resistance mark. That's yesterday's high that we saw. Going by the options data, going by yesterday's high as well, this needs to get taken off to see a bit of a bounce from here on. The support you have at around 24,450. Going by the options data, 50 rupee premium, 24,500 put was seeing some kind of writing. But otherwise, the broader support comes in at around this 23,380 odd level. The question I'm asking is, since the Nifty is only 6% away from its 52-week high, can we see a broader market outperformance? Because remember, those indices, they got clobbered on the way down. And now they need to fight back. So the small cap index is still 13% away. We've seen the last few days the broader market has outperformed. Even the Nifty Next 50, that's 16% away. So I'll be tracking whether or not these indices actually can outperform the Nifty in the near future, just going by the data points that we have. The stock that I'm looking at, since the market seemed to be in a better place, and we've seen exchanges as well like BSE, MCX, etc. do quite well, I'm looking at a stock market play. Angel One is a stock that I'm looking at. Yesterday, the delivery-based buying was there. Close to 2.7 lakh shares were delivered on the NSE itself. That's much higher than the 10-day average. And if you pull up a chart, the 20 and the 50 DMA as well have got conquered. Remember, the stock is a far cry away from the highs that we saw in excess of around 3,000 rupees. But if the markets are in a better place, participation is coming back, I'll keep an eye out on Angel One.
Okay, all right. So lots of individual stocks in focus as well. Nigel, thanks for that.